Good turnaround Tuesday, everybody. How's everyone doing? How are you, Ingmar? Hi, Kay. And we have Mike here, James, Glenn, Steve. Hi, Bran, Marcus. Yeah, the time change. People are getting the hang of it now. How you doing, Nick? Nick's going to present today. Hi, Laura. Also, we have Stelios here, and I believe Grega's going to drop in. So you guys are going to get a lot of content. So let's talk about what's going on. I'll I'll make it real snappy. Just a couple things that I want to talk about, and I want K-Man's opinion on the first one. Hi,
Morning,
K-Man.
coach.
Hey, buddy. So Yen's trying to come out of here. I'm we've been diverging since Feb
Mhm.
20th, and looks like the market is a little bit more stable. Um, what do you think?
Yeah, we've had a little surprise move there. Yesterday the trade minister Muto was in Washington talking to the U.S. and he said that they have not got any assurance yet that Japan will escape the U.S. tariffs, and so that move took the market a bit by surprise, and even myself, to be honest. Because yesterday I was pretty comfortable short euro yen with the decline in equities, but that flipped around. Lucky I was having one of my sleepless nights and I saw it relatively quickly, so I could get them back at a decent level. But yeah, I think it's to do with those tariffs.
Okay.
Um, and yeah, and the euro being so strong. If you look at euro yen, like two big figures move from yesterday's lows.
Yeah.
But already before that happened, during the yesterday's dump in the equity markets, we had the move lower in yen pairs, but they did not follow through. So
Yeah.
I think your observation there of the lack of follow through, bit divergent, it may have played as well, and the market being long yen, I guess.
Okay. All
Yeah.
right. Well, today's your last day before you go, right, bro?
Yes, sir. I'm going to see my newborn grandson.
Okay. Well, maybe you ought to bring him some precious metals. So this was this was my area in silver that I
Yeah.
talked about last week,
Mm.
and it's a nice reaction. Also, yesterday I noticed when the gold silver ratio was railing, it would look corrective to me. And off this break. So I still think this is headed lower. It makes silver your preferred long when you're bullish metals, and gold your preferred short when you're bearish metals. So we have so many people here. I think I'll start with anything else you want to feature before I move on to
Uh,
someone
just
else, Kay?
just the euro. Pay attention to the 109.40.50. We are heading there. The still positive vibes over what the spending could mean for the European bloc, more psychological than effectively bringing in a lot of money, perhaps for now. And yeah, the market is still reluctant about the U.S. policies right now, and we're seeing this rebalancing act ongoing still, and that is what's
Yeah.
keeping the euro a bit right now.
Yeah, I heard this is a major shift that happens every
Mm,
20 years,
yeah, every X.
capital
Mm.
flows.
And
That's why,
exactly. And
yeah.
that's the
So,
thing. Yeah, and I think the message here as well is that obviously if you think this is a short-lived move and you want to be short euros, fine. But I was just, and I've been talking about that already a number of times. Flows. If you are in a rebalancing act of the bigger money managers,
yeah.
it's quite dangerous to start to pick tops and things. Let the move do its thing first. Let those flows do their thing, and then see where we end up. And if you need to counter trade or just continue to jump on the train,
All right. Well, thank you, buddy.
no problem.
I just wanted to show the 10-year. So far, okay. So we knocked on the door of this 434. Hey, it rhymes. Knocked on the door at 434. I wonder if it gets through, if it could rally more.
Or if we fall back to the floor.
Yeah,
And it
the floor.
definitely hasn't been there before.
Yeah. So anyway, we really aren't traders, we're poets. So that's the area, if you're looking for lower yields, this will tell you that's over. And I know Stella's here. And Stella, what I remember from last time you were here, you were showing the notes and you were showing the bunds, and that was before that big move. And the bunds look strong. It looked like a stronger chart. And I think that's part of it. But rates aren't coming down in Germany. Do you think that it's possible that we follow the rest of the world again? We're not leading rates now, that we might be following.
For now, I still think the direction for yield is lower. Even in bonds, of course, the recent developments. There's going to be lots of issuance to cover the
Yeah.
spending, and that's bringing weakness. But I think yields are going to be edging lower or drifting lower more everywhere.
Okay.
There's too much uncertainty. I think oil is going to be breaking below support, and that's going to bring deflationary, well, not deflation, but disinflationary forces, etc. Do you mind if I take the screen for 2 minutes?
Yeah, I
I know
just
we have
want
quite a
to,
few people here
yeah, just
today.
want to point out
Yes.
that uh, the bonds did not make much hay with risk off like we've had the last couple weeks.
Yeah. Yeah.
Okay, so yeah, you could have the charts to make your case.
Thank
It's
you.
like a courtroom.
Okay, desktop one. Here we go. So, okay, so we talked about, let's start with yields. My view remains that we're going to be testing these lows here, and simply because there's just too much uncertainty at the moment. There's a lot happening. Yes, there's going to be more issuance, especially on the European side and probably the UK as well. But I think the path of least resistance is lower in yields. CTAs are still very short. The market is short in general, so I think really, I mean, and look how close we are to these levels here now. Um, if this breaks, then we have.
How about a pop for a right shoulder up there at your
Yes,
450 level?
we could get that. 445. We could get
Yeah,
that. Of course, anything can happen. It's not an exact science, but this remains my view, as does that the dollar is going to keep going lower, which I've been saying for a while. Um, and the dollar, the Dixie is going lower. Um,
it's collapsing.
Yes, well, then again, it had been going strongly higher in the last quarter of 2024, so it's kind of giving back those gains. But as a similar chart, this is quite similar to oil. If you look at it, we're getting close to an incredibly important support zone, because if this breaks, it's just clean air below, and I don't know what's going to happen after that. But one thing's for sure, Trump's policies, like he says also, he says it's a short-term pain but long-term gain. Well, we seem to be getting the short-term pain part. Let's see if we get the other part. But oil is very important. I mean, look at this. This is also it's what, a 4-year level. And I think I've said this before many times. I know I sound like a broken record, but I think this will break lower, and this is going to be disinflationary, which means that yield is going to be pushing lower, because I think inflation readings are going to be receding, going lower. I don't know if you've seen Trueflation, that measure. It's showing 1.5% for the US. So that's quite divergent from CPI and PCE and all that. Um, and I think that oil will break, and that will take inflation lower, and that will take yields lower. The question that everybody asks is what happens with equities? Because we have, in the S&P, we've been looking at this chart for a while. We broke that kind of primary support, which was this support trend line. But really, for me, the big level was 56.70, which is a fib. It was these highs and then lows, so it was quite important. We've broken that. I want to see this getting retested at 56.70. I'm going to short there with a tight stop. But the problem I have with doing that, and the reason why I'm going to do it with kind of small size, smaller than usual, is that if yields go lower, which I think they will, that usually brings support to equities. And that kind of makes me a little bit hesitant. But overall, the technical sign, a signal that I was waiting for, and I've been talking about for the whole of this uptrend, has happened. And if we get a nice retest now, which we seem to be rallying a little bit today, I think it's going to be a great risk reward short, obviously with stops above, etc., etc. The well, you talked about metals in the morning, in the beginning. We have to mention them. They are recovering today, and frankly, if you look at the long-term chart, I mean, gold is looking supreme. Amazing. Risk off, everything gets sold, and gold is just, a few couple of percentage points of its highs, of its all-time highs. So would I short this? Absolutely not. I'm still bullish metals. I prefer silver and platinum because of the ratios. The gold-silver ratio, you correctly said, Dale, is coming down a little bit. And look, we were kind of rejecting the top of this channel. So my preferred long is still silver. I have two positions, one from 2310. People who listen to this will know. The other one from 3242. And I'm keeping both. And frankly, if we break above, I'm going to be adding more. 37, close to 37, I'm going to start taking some off. And 37 is because there was, I can't remember now. Was there a level? I have to go back and see why I chose 37. But anyway, if it breaks above this channel, then it has a little bit more to go, and I'm going to start to look at eventually unwinding some. Platinum is looking better. It's still in no man's land, in the middle of this very, very long wedge. But if you look at the ratios, it's looking very undervalued comparing to other metals. So the silver and gold, and this is platinum versus silver. And as I've said before, I have also the macro thesis of platinum and its industrial use, which I think is going to be more used than the market's expecting in the automotive industry. And crypto's trying to recover. Bitcoin almost bounced off exactly off this trend line that I had. Whatever, maybe it's a coincidence, but it is trying to bounce, but still looking very weak. Both of them, Ethereum down almost 50% from the highs, or more than 50% from the highs. So yeah, they're not looking too good, especially not compared to gold, because they're supposed to be, Bitcoin is supposed to be digital gold. Well, it's not trading that well at the moment, but let's see. That's it.
Oh,
Yeah,
you've got a bias.
I've got a bias. I do have a bias. Yes, I know.
That's
I'm a dinosaur.
who did I interview? Peter Grandage calls it, don't get mad at me, Bitcoin.
No,
You
I
like
think I
that?
think it has a different usage in terms of investment and speculation, but
Yeah.
real world usage is a different conversation. Anyway, let's see. Let's see what happens.
Well, Filecoin lost 90% of its value
Yeah,
after its pop. Anyway, that
yeah.
was, that could create gas in any for any trader. Anyway, thanks so much, Stel.
Thank
Nice
you, Dale.
roundup. And let's bring Nick in, and we'll wrap with Grega. So Nick, if you want to take control of the screen, like outer
Hey there,
limits.
hey there, Dale and everybody. How's it
Hey,
going?
buddy. All right, how you doing?
Good. What a few weeks we've seen.
Yeah.
Thanks for handing it over to me. I'm gonna go and talk a little bit about the dollar. So, man, it's really come off the last few weeks, and if those in the community know, I just got out of most of my dollar shorts last week, and part of me wants to get long and try and play a bounce, but I'm gonna show why I'm a little bit nervous about that. So. You can see here from the lows of September, we rallied up about 10% or so. And since then, we've come down roughly 6. And within this channel as well, we've broken it. Now, when I go back and look at 2016, 2017, when Trump got into office, you'll notice we had a really similar pattern. From the lows, we popped up roughly 11%. In that channel as well. And we also pulled back to the 618, which is where we're at right now. That was after another, 6 or so percent decline. But what I want to point out is after we got down to that, weekly 618, we bounced a little bit and fell another 7%. And I think that the Trump administration is kind of hell-bent on a weaker dollar. So as much as I want to play these bounces, I am a little bit hesitant, and it's beginning to make me rethink a lot, because we've seen so much weakness in the equities and we haven't seen the dollar respond how we might have normally seen it respond. And I think that there's a little bit of a shift going on as far as the new administration. People are certainly uncomfortable. And, I will point out from the lows of April or so, from the lows of April, we've come down to the 50% retracement. In the NASDAQ, we came down to the 618. And in the Dow, we came back just under in between the 38.2 and the 50. So clearly there's a little bit of singling out some of the Mag 7, right? And how overvalued they've been. And I think we've seen a lot of government spending the last last 4 years or so. And there's going to be a little bit of a tough time trying to get towards, maybe a new regime. And I went back and looked at when Reagan got into office. I was looking at this last night. And the reason I'll explain why I'm bringing this up, but I noticed that when he got into office, and he was also what seemed like someone who's kind of anti-government maybe, and you're seeing that with Doge and other things. We saw the S&P actually decline 10% after he got into office. That would just load for me. About 10%, which is where we're at right now. We've pulled back just under 10%. And that was in February. Then we saw a bounce, and eventually it led to a 27% decline. And then, we eventually saw a weekly 3 drive. Dale taught me that. But we'll talk about that in the event we end up seeing it. But what I'm getting at is there's a chance that we correct much further going into 2026. And maybe we do get a bounce here. Certainly when you look at some of the dailies, we're definitely oversold quite a bit. And sometimes those are good opportunities. But what I will point out is I think this week's going to be very crucial. We do have CPI tomorrow, which infers it's going to be tough for the market to potentially trade through these lows. The market kind of is rarely on its heels ahead of big data. So maybe we stabilize today, pop up a little bit. But one of the reasons why I think this week is so important is we've seen as of March 6th, the S&P had about 6 consecutive days of at least plus or minus 1% changes while not down 20% on the year. Now the Russell was close to 20% yesterday, it was down 19, but anyways, moving along with the S&P, you'll notice that if we do get a positive, like the next week is a little bit finicky, okay? It's only up 56% of the time. But what you'll notice is that if we get a positive week, which is this week, you'll notice that the rest of the weeks tend to be positive as well. And if it's negative, the next 2 weeks tend to be negative as well. Now, I find that really important because if we can somehow get a positive week, we'll have to see what happens. But if we do get a negative one, that could be scary as well. And I saw another statistic about the NASDAQ showing that if we get a drawdown and returns after crossing the 200-day moving average, first time in a year, down about 6%. The next year, we've only seen this in 2000, 2008, and 2022. It infers a bear market that year. And what does that look like in the NASDAQ right now? Well, it would mean a close pretty much below, this is the 6.5% or so, right near 18,612. So you can see, kind of feel how important this week is. And as far as corrections go, we are kind of due for a 10% correction. The last time we saw one was in October of 2023. And, the average is 290 days, and we've certainly gone past that. The other interesting thing is we are kind of due for a 20% correction, the average of 823. The last 20% was in 2022, but that is an average, and more recent history suggests we could go a little bit further, maybe into 2026. But essentially what I'm pointing out is this is a finicky market. I've even been redrawing stuff. I was looking at the SPY yesterday, drawing even a megaphone because it is feeling like an up, down, and all around year. But I'll leave us with this. I think we might want to retest 5840 or so. Sorry, let me get to the actual SPX. Maybe back test this trend line here, or the breakdown somewhere around 5800 to 5850, and then it may reject from there and head lower. But this is a wacky environment, crazy environment, and we're just living to see another day, right?
Highest conviction idea for the week, Nick.
Highest conviction idea.
Yeah, you heard me.
Um,
You need time to think about it?
yeah,
Highest
well,
conviction idea for the week. We have
okay, well,
CPI tomorrow.
yeah, so I just got on Monday yesterday, I got stopped out as we traded lower. I re-entered near the close. I'm playing this wedge. If we can clear back above 56.94, 5,700, I think we have a false breakdown and a pop up near 5,800. That's probably that's the play that I'm playing into ahead of CPI.
Okay.
And also for CPI, I will point out, and Jim Welsh taught me this, you want to look at the prior year. We had a 0.4 in March of 2024 and a 0.4 in April as well. There's even more of that in February. Last month we came in hot, but Trump kind of does have the next 2 months to try and get inflation down with these high readings. So it really is pivotal because I think if it comes in hot, that would really spook some people because he's kind of has a layup the next few months. But we'll see. We'll see. Because if we come in line, that should drop the year-over-year inflation, down from 3.3 to 3.2. So we'll just have to see. And I do update all of these, stats and stuff in the chat room. If you guys aren't a part of the community, definitely check it out. It's $1 for 10 days. Everybody's pretty active in there. Also check out the Flow Show. I listened to Cayman all morning. I didn't have to dive through the news. I just listened to him for 30 minutes and I was right up to speed. So definitely check Cayman and Ryan out on the Flow Show.
Okay. You're not in the know unless you're in flow.
That's
So
right.
anyway, let's bring Grega in and why don't you hand it over to Grega?
Yeah,
Good
I'll
morning.
stop here.
Thank you, Nick.
Yeah,
Thank
thanks,
you for
Dale.
sharing.
Thanks.
Hey, how you doing, Grega?
Hey, I'm fine, thank you. And you?
Pretty good. We getting close here on oh, look at Greg, the notes. Okay, so this is a pullback to
Yeah,
buy. Okay,
yeah.
go ahead.
I think
Go ahead.
that treasuries are going to see more upside. We are just now consolidating maybe ahead of inflation data tomorrow. But overall, I mean, as Stelios said earlier, we have a pretty clear direction at the moment on the US yields, and I think that this will be the main driver for the US dollar. And if we consider this structure, if we really are here just consolidating for a wave 4, I think that the fifth wave obviously could maybe offer some opportunities on the dollar, which is at the moment testing some very important level here around 103. So I would suggest to wait on some kind of a bounce. Maybe we'll get some rally from here, like Nick also pointed out. But 104 up to 104.50 is the resistance area to watch for. So even myself, I would be looking for potential buying opportunities on the euro dollar at the same point. Of course, as I talked about the mentioned inflation data, we know that energy prices were quite significantly moved to the downside since mid of January. And obviously, if we respect how the CPI print was after this, some very big moves, I think that because it was a pretty strong drop on crude oil prices, that there is actually a chance that we will get soft inflation data. So in my opinion, of course, these dollar moves and yields could or should remain in the downside. But even if there is some surprise to the upside, I just think that there would be just a perfect scenario to get this wave 4 rally. So whenever this wave 4 rally will show up, I just think that there will be opportunities to look for dollar shorts. Regarding euro dollar, we have some resistance here around 109.50. It's back when Trump won the US election. So also very strong resistance up there, not really level where you want to chase the market. But I think that the next dip could be quite attractive. Also consider that this range for Monday was now pushed to the upside. And I think that there can be a fifth wave because we know that moves out of a triangle usually are fifth waves. So the next pullback, it's something that we should keep an eye on. And these are the support levels to watch for. And myself, I will definitely keep an eye on.
108, Grega,
Yeah.
107.5.
Yes, around 108.
Okay, thank you.
Yeah, that would be ideal scenario. Of course, we may see a sharp extension to the upside, and then we will just have to wait whenever we get something similar, like we have seen here back in wave 2 of the same degree. But overall, because of this rate differential, we just have to respect the euro strength, and I just think that this will not change the direction just yet. I also think that there's still a chance for some bounce on stock market. Here I'm looking at the S&P 500. Notice that since 2022, always when we have seen a pullback for the 10%, we have seen a pretty strong reversal to the upside. And basically we are just right now seeing this kind of a pullback. So we know that we are most likely in very stage of a fear when we are moving into some extremes. And even if I'm wrong on that call, that's end of a wave 4, we still should see some kind of a relief rally here, at least for a wave B, if not something else. So I'm just wondering if we can get some intraday structure that will confirm that we have a low in place. Unfortunately, for now, that's not the case yet. But if we'll see some rebound tomorrow after inflation data, I don't believe that we will see any big moves before that. But if we'll get higher and then maybe finish the week around or above 5,800, I think that on pullbacks, there will be new opportunities to look for within this recovery.
Ultimately leading to a short and another wave to the downside. You're calling this a correction, not that, this was the end of 4 and we're going to new highs.
Yeah, I mean, if this recovery will prove to be only in 3 waves, and then we will sell off from resistance levels, which normally should be around 50 or 61.8%. And if that would be near 6,000, of course, I will immediately say that was only wave B rally, and that wave 4 had a lot room left to the downside. But at least at this stage, I would not be surprised to see some relief rally. And then let's try to figure the wave count later on, whenever we will have this bounce to identify the structure here.
Yeah, I've been talking all month that a good place to have a rally would be into option expiration, which is what, a week from Friday.
Yeah,
so
exactly.
People,
So timing can be very interesting right now at the same time when we are trading at these levels. So I agree. But
it's a big one. March, the ones that end on the quarter are even bigger.
Yeah, agree. Also, maybe it's worth to mention gold. So we had a very nice pullback here on gold. To 880 to 890 was a perfect support. And I think that we are now headed higher for the third leg. I'm not sure if this will be a wave C. Maybe we'll get surprised and will be even wave 3 of a new impulsive uptrend that will breach new all-time highs and take us towards 3,000 level. But in either case, the minimum expectations suggest that we should see around 2,950 maybe this week. So at the same time, we also can see the silver is moving away from support levels quite nicely. So I think that metals are having a very beautiful structure after this pose that we have seen for the last 2 weeks. Maybe one last thing.
I'm looking maybe 30s. Take out that previous high and trade up towards 36 on silver.
On silver, I think I'm looking at 34.
Okay, so that was the last high.
Just a second, I have it here. Let me just, okay. So here was this corrective decline. And I think that 34 would really are testing the trend line resistance right now. Obviously, we will need some catalyst for this third leg to the upside to play it out. But I think that maybe tomorrow is the day when we will get this interesting volatility. But you never know when with Trump it can happen anytime. So,
all right. Well, thank you, Grega, K-Man,
Stelios,
Nick. Have a safe journey.
Thank you very
trading
much.
warrior brother. And
Dale,
Yeah,
do you have an interview?
I do.
Has your guest arrived yet?
Yeah, David's here.
Ah, maybe he hasn't accepted yet.
Oh, okay. Let me I
Dave,
see
yeah, I
radio.
see David Keller.
Yeah, I didn't move him over.
Ah, okay.
Here we go. Promote to panelists. Okay, David, you're getting a promotion.
Thank you very much, Dale. And
Uh,
I see you in a few weeks, right?
yeah.
Beginning of April.
All right. Well, enjoy.
Thank you
You
very
know,
much, my friend.
money comes and goes. Time is gone forever. Um, a good job for you to make it count. All right,
Absolutely.
buddy. All
Thanks
right,
very
buddy.
much, and
Yeah,
You
have a
know,
great
thank you,
interview
Dale,
and a great
and
swing week.
safe travels, K-Man.
yeah.
Cheers, buddy.
Thanks, Nick,
Thank you.
for coming in, and Grega. It's always great to have you here and Sell. Used to work with you every day, so it's great to have you here when you can make it. And we have a great guest today. David Keller is one of the best technicians. I know he has a demeanor for being tactical because, David, I don't know how you do it, but you always seem calm to me. I'm just an emotional guy. So, uh, comparatively, you've got the psychology that I'm trying to learn. So, welcome back, buddy.
He isn't there. Oh, there we go.
Hey, can you guys hear me okay?
Got you, David. How are you?
There we go. Hey, sorry about that. No, thanks and thanks for the kind introduction, Dale. I appreciate it. That's very kind. I feel like we need to throw some cool water on the market discussion in the day like today. So we'll do our
Okay.
best.
All right. Because, I see you on X and you do a lot of live stuff there. You have a lot of people watching you. I saw a YouTube video a few weeks ago where you were talking about what the signs of a bear market are, and that was right around the turn, or at least before things got very nasty.
Yeah.
So nice work, Dave. What's top of mind here to throw some cold water on?
No, I mean, I think the signs of this sort of bearish rotation had been building for quite some time, and
Yeah,
I forget the last time you and I spoke together, but really since November, December into January, you started to see some of those early warnings of breadth deterioration, of
yeah,
momentum deterioration, new highs on weaker
yeah,
support. And now you're just sort of seeing the downside rotation. And now, I mean, obviously, there's a lot of changes in the geopolitical environment, in news flow out of Washington, which is sort of it's putting an accelerant into the market volatility.
yeah,
But I would say the signs of a bull market exhaustion were pretty clear, and now we're just starting to see some of those initial breakdown signs that are really starting to follow through to the downside, with yesterday being like an exclamation point to that distribution phase.
yeah. That was classic Wyckoff, wasn't it? That distribution. Everyone
That's right.
kept thinking it was just consolidating. Did the breakout, and maybe you could share your screen, Dave, did the breakout initially over 61, did you have to respect that? Even though it didn't do much, it turned out to be a false breakout. But a lot of people, including myself, I said, well, okay, we have a breakout here. It measures 64. And then I don't know, it was 4 days later, the breakout was negated.
Yeah. Here I'm happy to show. I don't have an
Yeah.
option to show my screen somehow, Dale. I'm so sorry.
Okay. Let me grab it and then give it back because whoever had it last didn't release it. Okay, try it now, Dave.
Yeah, I'm not. I don't think I'm at the level where I can be sharing, unfortunately.
Oh,
Something I usually have like a share screen option. I didn't get it this time.
oh, you know what? Because you're not a panelist. That's why. Let
Yeah.
let me promote you.
Okay. Okay.
That's what didn't happen.
Yeah. Yeah, okay.
Anyway,
No worries.
anyway, live TV.
Here we go. Here
w-
we go.
with
Okay.
with an amateur producer. All right. I'm a host, producer, and booker. Everything. All right, we got
There
it.
we go. Can you see my screen okay now?
Got it, buddy.
Oh,
Yeah.
perfect, perfect. Yeah, no, so I appreciate it. And I would say that that break above 6,100, I guess the way that I've been seeing 2025 so far is that the peak was that December high at 6,100. That's when we had the strongest momentum. That's when the RSI was last overbought.
Yeah.
That's when we made that last new all-time high. And then I see the January breakout and the February breakout as failed attempts to really push to a new high. And for me, I kind of give some natural wiggle room to support and resistance levels. I think some people really think, all right, if it's 6105, that means it's a new high. And I sort of see it more as a range than anything. So I
Naturally.
see the fact that those new highs were met with much weaker momentum tells you that these are false breakouts that are probably not going to persist much.
How
And
did you trade it, Dave? When you started getting signals, bearish ETFs, get out of longs,
yeah.
depend. What were you advising people, say, 2 weeks ago when you were starting to see these things?
So yeah, so there are a lot of different things you can do, and it depends more than anything on your time frame. I'm not a swing trader. I mean, that's not my primary time frame. If I was,
Okay.
though, these sorts of breakouts are where inverse ETFs, where
Yeah.
short positions, that's a bearish option structure would make a ton of sense. Especially, I mean, for me, I tend to ask the first question: what is the chart telling me is the likely path? And then what
Yeah.
position is going to help me best express that in a portfolio, right? That's kind of the two-step process. So when you have a clear sign that this breakout is probably not going to persist because of the weaker momentum, weaker breadth, the
Yeah.
things we mentioned, then how do you want to play that? So if you're short term and you're happy taking leverage and you're happy taking inverse positions, that's probably as good of a setup as I would see of selling into strength. For me, though, that tells me the days of thinking more about capital growth are probably behind us. The days of thinking about capital preservation are ahead of us. So I think you have two general things you can do. You can be taking on more risk, or you can be taking risk off the table. And I think going into those highs, you're taking on more risk reasonably because the market keeps appreciating. But then when you get those sorts of signals, it tells you to stop taking on additional risk, to focus on maintaining the capital that you have and unwinding positions that start to not work. And
Yeah.
during this period, it wasn't just the S&P breaking down, it's a lot of the Magnificent Seven stocks starting to
Right.
really reverse. I mean, February into March, I mean, even Meta, Alphabet, really good names in that group, just reversed and started to break down. So for
Okay.
me, it was more of a structural change in the portfolio, rotating to more defensive positioning, defensive sectors, higher yielding things, gold, just there's things outside of mega cap growth, which has been the trade for over a year, of course.
What do you tell someone who was paralyzed and they're still long?
It's so no, it's such a good question. And the worst
I
question that I
guarantee
get
you,
is,
there's guys like us, it's for us to be short or out.
yeah.
It's different than most people who just, watch it casually and know every dip they're going to be okay. Then eventually they just stop opening their statements. But say for example, do you think that we're due for a little corrective action here? And would
Yeah.
you be raising cash if we got back to say 58 to 5,900, something like that?
Yeah, so what's interesting is I put these percentages on here if you can see it. We're about 9.5% off that
Yeah,
mid-February high to yesterday's intraday low. And that's
yeah,
almost identical in terms of price and
right.
time to that pullback we saw in July to early August. So if this is like one of the deepest correction in 24, this should be it. I mean, based on what I'm seeing and how the conditions have changed, I can't imagine this is it. I'm fairly certain we're going to have more deterioration before this is over. Having said that, having broken through 58.50, having broken through the 200-day moving average
Yeah,
specifically, the idea of a counter trend rally back into these areas is, I mean, not a certainty, but pretty likely. And that first bounce, everyone's kind of encouraged. Bears see that as a logical kind of dead cat bounce after a significant drawdown. That, that was the first wave, and now there are multiple ones that are going to come next. Bulls all of a sudden start waving the, we did it flag, and we're all excited.
Yeah.
We're going to go back to all highs. And so this next leg is crucial because if there's enough of a change, I would say a structural change, and for me that means breadth conditions, momentum, leadership that tells you that there's enough happening that could sustain a rally, then I think you have reason to be bullish. I don't see that as a likely scenario. I see this as more of a counter trend rally. If you
Yeah.
were, and your question
Along
was,
a
what if you're
tan
holding it now? I think
yeah.
waiting for a bounce and an opportunity to unwind at a bit of a higher level would probably be a really good approach here.
Okay. So yeah, so we're looking at this could be a failing rally. All the other 10% corrections did lead to new highs.
That's right.
Doesn't it look like there was much more technical damage done here? And you would think that it wouldn't just be a V bottom, that it would have some work to do if it was going to be an important low.
For sure. And I think the trick to differentiating short-term, very buyable pullbacks to the beginning of something that could be much more significant is just really trying to assess the conditions and compare them to previous corrected periods. And just the simple fact that we were above an upward sloping 200-day moving average for pretty much the entirety of
Yeah.
2024,
Yeah.
those brief pullbacks happened within a clear primary structure. Now, what's happened in the last 4 weeks is we've now broken the 200-day, which, to some may seem like a minor thing. I don't think it is because I worked with a lot of investors that are not technically oriented. They all know where the 200-day moving average is. Even guys that aren't chart guys are aware, uh-oh, we broke the 200-day. And so they
Yeah.
they see that as a change. And then I would say the other thing is just all the structural change. And when I think about structural changes, it's defensive sectors that were underperforming for the longest time and now all of a sudden are outperforming. And not to digress, but this is a chart I'll show you that I think illustrates that really, really well. One of the things I look for is the relative performance of different sectors. So this is the relative performance of utilities, healthcare, consumer staples, and real estate versus the S&P 500. So if these lines are going up, those sectors are
Yeah.
outperforming. They go down, they're underperforming. So back in those previous pullbacks, we're still in just a big long-term downtrend. And that last major drawdown, you saw this little blip where these defensive sectors start to improve. We've seen a much bigger improvement on a relative basis so far in 2025 than we've seen in quite some time. And I think that rotation to more defensive positioning is one of the signs that institutional investors are nervous and they're trying to hide out in the most conservative, safe, least risky part of the equity space. What told us that V bottom in July and August was a good one? It's because these defensive sectors start to
Yeah.
underperform, which tells you that investors are reallocating and taking on more risk. So until I see that on a chart like this, I have to assume that we're getting defensive because we feel that further deterioration is a likely scenario. And then at this point, this is what I'm seeing.
Yeah. What I think is a more negative sign than, I've been bearish Nvidia forever and Apple and the Mag 7. I use a joke that at least in the movie, 3 made it, right? And anyway, so so to me, what happened in the financial sector, in a
Yeah,
matter of a week and a half, they took 10% out of B of A. XLF got pretty badly damaged too.
yeah.
This tells me that that they might be worried about a credit issue if we get this growth scare. Because they were the leadership, they held up the best, even during like the corrections that we had last summer in
Yeah.
August, a big sell-off. So to me, this is more than just a chart breaking down. I think it has kind of a warning of an economic message that there could be problems in the banks.
I mean, what we have to remember, and 100% agree, Dale, and what we have to remember with all the headlines that are coming out and all the news from Washington, I mean, and arguably, not to get political, I mean, some of the decisions that are being made could end up being really good for the markets, but not in the short term. I mean, this is sort of short-term pain for long-term gain kind of approach.
Yeah.
And certainly the way that I think the market is reacting, almost a willingness to accept deterioration in stocks as a short-term cost of making changes that are perceived to have long-term benefit. And so I think in the short term, we have quite a bit to be concerned about. I mean, this week, of course, inflation data is going to be key, right? The next couple days,
Yeah.
and I think we're one overheated inflation number away from this getting really ugly because all of a sudden that suggests that the Fed has a very challenging path to navigate if they don't already through the rest of 2025 and just brings further uncertainty. And that's been the sort of specter of inflation that tariffs and others would have inflationary results, which I think is a logical outcome. The market's starting to tell you that, yeah, that could be a real issue. I think the news from Delta earlier was important as well. I mean, sort of lowering guidance, but those are the sort of signs of weakening consumer demand, consumer confidence sentiment that can cause a lot of stocks to have a difficult stretch here. And we're heading into earnings about a month out, and that's where we could get additional color on that as well.
Yeah, and B of A took it harder than probably the hardest, but all of them. I mean, you look at Goldman Sachs, J.P. Morgan,
Yeah.
they really took it hard. That tells me that the move in bonds and rates is probably never more important if the B of A is probably under pressure because they have the largest duration book out there.
Yeah.
So how
Yeah.
does TL look at that in a matter of, a few days? Although
Of
we
course.
did that in August, right?
So,
And
and
came back.
again, and this is the challenge, Dale, is the beginning. I mean, a steep garden variety 10% pullback within an uptrend and the
Yeah,
beginning of a 50% 2022 kind of decline
yeah,
look
yeah,
very similar. I mean, if you look at January 2022, it doesn't look that different from these two little pullbacks. This is kind of how it starts. The
right,
question is that next leg, right? And the bounce. And
right.
if you see legitimate accumulation or if you see just counter trend rallies. And that is where 2022 and other really painful years started to look even more different because you didn't have that recovery, right? You had that initial bounce and then there's more selling. The momentum never improved. The breadth never really improved. And so I think this next move is going to be a crucial one to watch for sure.
Yeah, and I think a lot of the Bears didn't even catch us because they were looking for 6,400.
Yeah.
Because you had 3 months to sell against 6,100, and
Yeah.
that wasn't enough. And the 7,000 bulls using the
Yeah.
7K handle. So why don't we take a look at TLT and give me your impressions of what we're seeing here?
For sure. So I think I mean the biggest changes that we've seen when we talk about structural changes, it's also outside of the equity markets. It's bonds. I mean
Yeah,
commodities, particularly gold, has not changed a ton. I mean, I would say the technical
no,
profile is similar, but in the bond markets with the dollar, that's where we've seen significant
yeah,
shifts here year to date.
yeah,
I mean, again, I have a pretty simple toolkit, and I think what's happened with bonds is we've just had a very clear rotation from a distribution phase from mid-September really into early January to now more of an accumulation phase. I mean, stocks and bonds were sort of moving together there for a stretch, and now we're seeing that divergence where stocks are selling off, bonds are appearing are sort of continuing to rally. TLT's broken above a really just kind of simple trend line structure
yeah.
and
Gapped.
broken to new highs. And now testing the 200-day, arguably starting to push above it here this week.
Buy pullbacks, and people know I'm bearish from last week. I didn't talk about a bond crash. I just said a pullback towards 89,
Yeah,
88, and
yeah.
that would be a right shoulder there,
Yeah, and
possibly.
I was going to say you almost see the beginning of a head and
Yeah,
shoulders like pattern here, and that could be. I mean, if you get that snapback rally in stocks, that
right.
would pretty reasonably, relate to a pullback to like 88, 89. At which point, I think that's a
Yeah,
pretty constructive pattern. And then I guess the big,
the
down leg
dollar.
for stocks probably involves this neckline being broken, which would be the neckline of that kind of
Nice.
big bottoming structure, if that makes sense.
Okay, yeah, everything you've said today makes sense. Do you like the miners? Dave, is there anything, I know everyone hates crude. Everyone hates oil. It's sitting on a major support level that it's probably going to break down out of.
Yeah,
And I'm waiting for that capitulation to get long. If you thought there was going to be a big rally in WTI
yeah,
after they clean out the bulls and maybe trade low 60s,
yeah.
what would you go with? Would you go with USO? Would you go with Devon Energy? For kind of a pure play on oil, um, what kind of oil stocks would you look at if you thought you were going to get like maybe a rally back to 90 or so?
Yeah, I mean, so honestly, I'd probably buy energy stocks if that's where I was thinking. I mean key names
Okay.
because these are charts that have been incredibly underwhelming. But
Yeah.
looking, I mean, this is the 1 month change in actually let me just show like yesterday. So this is a heat map just showing
Yeah.
everything in the S&P 500 yesterday. You can see the big deterioration in mega cap growth and in
Right.
the growthy sectors. Look at energy with like Exxon up 2.5%, COP up 2.5%. So, energy has started to, really have an inverse correlation to growth, which makes sense, but it's really sort of it's been magnified here. The
Okay.
challenge for energy stocks, and the reason why, from a technical perspective, they've not been good, is because crude oil prices have just been consistently weak.
Yeah.
And for a while, I was sort of hammering on if and when crude oil gets above $80, that's when you want to start adding energy to a portfolio because that means there's enough of a gain that, energy companies are going to make money with higher oil prices. That's is a very close relationship between those two. You're seeing energy stocks hold up okay while oil prices are coming down, which means if oil
Yeah.
prices actually start to improve, energy almost feels like a leverage bet on a rally in oil prices. And I think that would be a good place to be. So for me as an equity investor, it's challenging in a time like this to find things that are working, but I think they're out there. And if oil prices could turn higher off of support, I think that would be a really interesting way to do it. And it wouldn't be the big integrateds; it would be DVN and others that I'd probably be looking at.
Okay. Thank you for that.
Yeah.
Because I do think that Israel isn't going to let its Iran. They probably already have a nuke, but I think they're going to do something. And if they do something, Iran already knows that they can't penetrate the shields that Israel has.
Yeah.
And so how do they hurt the world? They just aim their missiles at Saudi Arabia. Just
Mm,
some a narrative I've been thinking about. And our president, there is I guess, evidence that Iran's behind assassination attempts on him. And I think he could probably go along with Netanyahu on a mission like that. So, we're going to have just so many things in the air. Now the government shutdown, or we're going to have a shutdown. Uh, can't believe the Republicans are going to give the Democrats a talking point and shut down the government. And everyone's recency bias is they'll just kick the can. They'll kick the can. What if one time you know they try and kick the can and they miss, you
yeah.
know so anyway, wow, the world has changed, Dave. And you know what, people need to follow your clean, uh, understandable and nuances of how you chart. And I know they could find you on X. You have a schedule when you're doing those shows on X, when you're streaming on X. Uh,
Yeah.
maybe we should send people to your website, and you probably have, you know, times listed there when they could see you.
Absolutely. So I do a market recap show every weekday, 5 p.m. Eastern, 2 p.m. Pacific, and I stream it on YouTube, on X, and Facebook and
Okay,
LinkedIn. So if you go to my website, marketmisbehavior.com, you can find all the info on the market recap show and my podcast, which Dale, I hope I can interview on if you'd be up for it very soon.
sure. Oh, okay. So you're interviewing some people too on your YouTube channel.
I am doing that, and I would
All
love to
right.
continue the discussion there for sure.
Okay, David Keller, everybody, and follow him on X for the look how clean these charts are. David well, not completely. He's wearing shorts. He doesn't trade naked. He has shorts on, but look at how clean those charts are. All right, well, David, thank you so much, my trading warrior brother, for being here and giving me some ideas. I think Devin might be the way for me to go when I see $62 WTI. So thank you so much. You're really enjoy your looks, bunch of great looks, and I hope this is one of your best years ever, Dave.
I appreciate it, Dale. Cheers. Good to chat with you as always.
And not just in trading, in the important in the important ways.
You as well, Dale. You as well.
All right, buddy. All right, everyone. That's a wrap. You can join the team in 20 minutes on the Morning Edge. Okay, so what we do here in F.A.C.E is the tip of the iceberg. I've always said that. Find a community to work with. It's going to be really wild times, and you do need others' perspectives so that and keep an open mind. I promise you, don't be stubborn, be flexible, learn how to change your mind, have an open mind. It'll keep your account open. All right, everyone, don't just count your pips, count your blessings. Do that at least once a day. And this is Coach signing off. You're welcome, Timothy. Welcome to F.A.C.E. First time I've seen your name. You've made your first step to finding a good place. All right, Laura, Marcus, see you guys. Adios.